All right. Hello, everybody. Welcome back to another episode of the Sunday Market Futures. We are live. We are 3 minutes early. I was like, you know what? I'm ready to go. We might as well get started. And we are here. Thank you, everybody, for being here. Hope everyone had a great weekend. We've got November officially starting, folks. It's kind of crazy. It really is kind of crazy. We got 2 months left of 2025. It is November 2nd. This year has gone relatively quick. I mean, October was up and down in regards to the stock market. We had a ton of stuff to cover last week with the Fed and big tech earnings, but October's done, and we're here. We are live. We got a lot to talk about. We have a bunch of different things that went viral over the weekend in regards to new interviews, particularly around Sam Altman and Satya Nadella. So we're going to talk about that. We got Trump, who's doing a CBS 60-minute special interview right now. So there's likely going to be a ton of quotes coming in throughout the course of this market futures show. I mean, we're already getting quotes right now. We have a couple of clips already from the interview. So throughout the entire hour, you're probably going to get a bunch of different quotes, and I will put them on the screen and we'll analyze what's going on. Trump already tweeted like 5 minutes ago that we will be a third world country without the tariffs going into effect. The Supreme Court will be looking at the tariffs case this week, so that's going to be really important. So we'll talk about that. And then we got some updates from Buffett. He had earnings with Berkshire Hathaway. This is the last Q3 ever for Warren Buffett and Berkshire Hathaway. So we'll talk about some of the stuff they did. We have a bunch of different macro stats to look at, some charts in regards to what to expect in November. And then tomorrow, you've got Palantir earnings. So we're going to do a little bit of a preview on that. It is indeed Happy Palantir Eve. This is what? This is the 4, 8, 12, 15. This is, I think, the 18th quarter I've covered for Palantir. Just kind of crazy. And quite frankly, it might be the best quarter. So we're going to talk about that. And then we got Grabby Grab as well. So, I mean, this is going to be a jam-packed week. Tomorrow is going to be absolutely insane with Palantir and Grab. And we'll do a preview on what's going on with that. But we have a lot to talk about. So thank you, everybody, for being here. Before we get started, deep dives are out. 2 new deep dives. We have Nebius and Grabby Grab. Grab is a company that I did a 17-page deep dive on about 3 months ago. I refined the deep dive over the weekend, and I officially published it on Substack. And so there's the link right there. You guys can check it out. Free to subscribe. No paywall, anything like that. And then Nebius, a lot of people were asking for it. And I looked at Nebius. And I'll talk about it more tomorrow. Maybe we can talk about it at the end of the show if people have some questions. Look, it is really hard to not be bullish on Nebius from the simple perspective that it is a full stack integrated approach to data centers. And I think the bulls that understood that argument back when it was $20 have been supremely rewarded for it. I obviously did not understand that thesis, nor did I really pay attention to it. And then the first half of the Substack, or I guess the first kind of like 8 paragraphs of the article, I talk about why I likely missed the story. But at 1:30, look, I did the numbers. The numbers are in the chat, or in the chat, in the Substack. It's not that scary. It really isn't. Now, there is a large execution risk on if they can get another hyperscaler deal. But I mean, at 94, it was a really good buy, and unfortunately, I just sold puts on it. But at 1:30, honestly, it's not that scary. The execution is the biggest risk, but I do think the company has a moat. And I think that's the biggest thing I've been concerned about Nebius. Like, do they have a moat, or are they just another data center play? I think they have a moat. And as a result, it's exciting. So I don't have a position yet. I talk about why I don't have a position in the article, but it is on my list for 2026, and we're going to see what goes on from there. All right, let's get started. Thank you, everybody, for being here. In 14 minutes, we are going to get the overnight markets to open, and we're going to see what happens in overnight. I have not looked at IREN yet. IREN is on the list. Reddit is on the list. I think the next 2 might be IREN and Reddit in like a couple weeks. So those I am looking at deeply, and we're going to see what we get. I know after Nebius, there's some weird controversy between Nebius and IREN. It's kind of turning. I guess I have to do a deep dive on IREN now because the Nebius bulls hate IREN and IREN bulls hate Nebius. But yeah, we will see what we get going, and then I'll publish that as well. Futures, first of all, for those that haven't seen it, I think we're going to open up relatively green. We are up 0.3%. Trump has confirmed there is a U.S.-China deal, and so we'll talk about what's going on with the U.S.-China deal. Microphone cutting in and out. Okay, give me 1 second. Let me unplug for a minute, and I think that'll fix it. Okay. Let's put this up right here. Okay, microphone. Okay, should be good. Should be good. Let me know if it's not good, but should be good right now. Futures are green. Trump confirmed there should be a China deal going on. I don't know if China has confirmed that there is an official China deal, and that's why I think we are green, but we're going to get some details on that once the overnight market's open, and we'll talk about that. We have some new charts on the labor market. That's also really important to look at. We've been talking a lot about the labor market over the past couple of weeks. The biggest thing that we looked at was the amount of layoffs that we had last week, especially with Amazon with those 30,000 layoffs. So we're going to talk about that and some implications on the labor market. But overall, I think the reason we're green right now overnight is because it looks like there's some stability between Trump and China. Again, they met back on Thursday, and that helped the markets on Friday. We did close green for the 6th month in a row in October. So we closed that October up 2.4% for the month. And then overall, November is relatively green usually. And so we had a bit of a choppy October. Bitcoin and Ethereum kind of sucked in October. Maybe that changes for November. And if that does, that would be bullish. Now, Ethereum is getting a little bit of a boost. It was pushing 4,000. Now it's back to 38.83. Bitcoin as well pushing above 110. It was at 104 at one point last week. So, I think if there was any month for Bitcoin and Ethereum to do well, it would be November, as Bitcoin actually tends to do a little bit better in November than October. But we're going to see how these turn out as we get into the end of the month. All right, so in about 12 minutes, we are going to have the overnight markets open, and then we'll get into all the topics I've lined up after the overnight markets open. Before that, let's just take a look at this video because it has absolutely gone viral. Sam Altman was on the Brad Gerstner podcast with Satya Nadella, and Brad Gerstner asked a relatively simple question, which is, hey, I keep hearing you have 13 billion in revenue, but you've committed to spend 1.4 trillion. I think every day all of us question, could this be a bubble that explodes if OpenAI isn't able to officially spend on these commitments that they've committed to spend on? And here is what Mr. Sam Altman had to say to that question.
How can a company with 13 billion in revenues make 1.4 trillion of spend commitments? And you've heard the criticism,
First
Sam.
of all, we're doing well more revenue than that. Second of all, Brad, if you want to sell your shares, I'll find you a buyer. I just enough. People are. I think there's a lot of people who would love to buy OpenAI shares. I don't think you would,
including myself. Including myself.
People who talk with a lot of breathless concern about our compute stuff or whatever that would be thrilled to buy shares. So I think we could sell, your shares or anybody else's to some of the people who are making the most noise on Twitter, whatever, about this very quickly. We do plan for revenue to grow steeply. Revenue is growing steeply. We are taking a forward bet that it's going to continue to grow, and that not only will ChatGPT keep growing, but we will be able to become one of the important AI clouds, that our consumer device business will be a significant and important thing, that AI that can automate science will create huge value. So, there are not many times that I want to be a public company, but one of the rare times it's appealing is when those people are writing these ridiculous OpenAI is about to go out of business and, whatever. I would love to tell them they could just short the stock, and I would love to see them get burned on that. But, we carefully plan. We understand where the technology, where the capability is going to go, and how the products we can build around that and the revenue we can generate. We might screw it up. This is the bet that we're making, and we're taking a risk along with that. A certain risk is if we don't have the compute, we will not be able to generate the revenue or make the models at this kind of scale.
Exactly.
And let me just say one thing, Brad, as both a partner and an investor. There is not been a single business plan that I've seen from OpenAI that they're put in and not beaten it. So in some sense, this is the one place where, in terms of their growth and just even the business, it's been unbelievable execution, quite frankly. Obviously, OpenAI, everyone talks about all the success in the usage and what have you. But even, I'd say all up, the business execution has been just pretty unbelievable.
Okay, so the reason that went so viral over the weekend, we got about 9 minutes till the overnight markets open, and then we'll get into all the other topics. But the reason that went viral, and when I saw it, I was quite surprised as well, is number one, it's a legit question, okay? Broadcom, Oracle, AMD, NVIDIA, there was an article last week from the Wall Street Journal, have gained $630 billion in market cap just from the announcements of the deals that they have committed to NVIDIA. AMD probably will be stuck at $158 a share for everyone. I know there's a big retail army in AMD. The literal only reason that stock is at $250 is because of this OpenAI deal. That's it. And If someone else has a different reason, let me know. But that was the reason that got the stock to break out. So it is so, and the reason is not to downplay the significance of that deal. It's rather to underwrite how important the deal is and the spending commitments that are necessary to get AMD to that $400 billion market cap or to get Oracle to that $800 billion market cap, which is pledged from OpenAI. So when Brad Gerstner, who by the way is one of the bigger investors from the previous 2 years, he was early in 2023 in the private rounds of OpenAI, so he knows the company very well. When your biggest supporter is asking you a very simple question, he's basically giving you a layup. He's not trying to give you a gotcha question. This guy has a ton of your stock. Why would he be trying to make you look bad? He's trying to give you the opportunity to simply say, this is, if I was Sam Altman, I would be like, look, a lot of people think we're doing 13 billion in revenue. We are doing significantly more than that, which he wouldn't be lying about. I think the estimate is closer to 25 billion in revenue. Number two, our estimates are that by 2027, we're probably going to be hitting triple digits, so about 100 billion in revenue, which Sam Altman mentions a little bit later in the podcast, but he does it in kind of like an egotistic way, right? He makes like he kind of says it. He says it in a way that's bragging, when in reality he could have just answered the question and be like, "Look, we're projecting. We don't know if it's going to happen, but we think by 2027 we could get to 100 billion in revenue, which makes the 1.4 trillion spend, which is only about 14 times the amount of revenue they're bringing in, not look as crazy as the $13 billion annual run rate." And then he could have said, let people say whatever they want to say. We have amazing people like you, Brad, that support us. We have amazing people like Satya and Jensen and Lisa Su that support us. And because we have all these really smart people supporting our company and our growth, we are very confident that we're going to be able to commit to the spending that we have said that we're going to commit to publicly. That's it. That's all he had to say. That's literally all it was such a layup for him to give a compliment to all the people that are trusting that his company is going to succeed. He could give them a compliment back and say, because they believe in us so much, we are so excited to continue working on this journey. And that would have been the end of it. Instead, he turns into this like narcissistic, oh, I wish we were a public company so I could tell people to short the stock. He tried to pull a Karp moment. And it's like, there's a reason Karp is Karp. Very few people can emulate what Karp does and still be relatively charismatic. Most people that try to do that are not going to be charismatic. They're going to just seem like dicks. And, that's what he ended up doing. So I thought it was a weird response. I think it was overly defensive. You could tell Gerstner was taken aback for it. And Gerstner, publicly commented on Twitter. He was like, I think Sam is getting too much flack for that. I mean, look, in the grand scheme of things, is this going to matter? No. But like at the end of the day, if Sam is acting like that to one of his biggest supporters, aka Brad Gerstner, I wonder how he acts to other people. I really do. And it's one of those things where it really makes you think in terms of how this is playing out. So again, Gerstner tried to defend him right here, saying that people are reading into Sam being too feisty. We laughed about it. I'm like, sure, but in an age where every single AI company is depending on this company, OpenAI, which is the catch-22. It's like, even if you hate Sam Altman, even if that clip pissed you off so much, even if you think this guy is squirmy and you just want nothing to do with him, if you are invested in this market, you have to believe OpenAI is going to win. It is just that simple. And I would love any analysis from someone telling me that OpenAI can lose and the AI bull market can continue, because I've looked at the numbers. I'm working on a Substack piece about this coming out next week. And there is no way OpenAI, essentially they're too big to fail. It's just that simple. They're too big to fail. Given this, and you can say, oh, well, what about XAI, Gemini? Sure. But the reason AMD is at a $400 billion market cap is because of OpenAI. The reason Oracle is pushing 700, 800 billion is because of OpenAI. The reason NVIDIA, to an extent, has added the level of market cap it's added is because of OpenAI. So at the end of the day, it's like, unless a company like Gemini or XAI massively overtake the 800 million weekly actives that ChatGPT has, feels like OpenAI is too big. And as a result, they kind of have to win. So you kind of have to root for their success if you're invested in the AI ecosystem. But the guy who's running it is obviously not the most charismatic in terms of how we answer that question. Yeah, Altman said we want 100x those GPUs. And the one thing you have to commend OpenAI for is that, look, if you're invested in Iran or Nebius or like all these data center plays need someone to contract massive amounts of GPU spend, massive amounts of compute capacity. And at the end of the day, OpenAI is one of those companies that is, again, committed 1.4 trillion. Like, I haven't heard a lot of other companies commit 1.4 trillion for the next 10 years, which honestly might be cheap. So it's just one of those ways that the overall structure of AI seems to be playing out. But obviously that interview went viral because, Sam kind of sounded like a dick. The one thing he did say, though, later in the interview, and we'll listen to some other parts of it in a bit, is that we are on track to get 100 billion of revenue by 2027, which is a big deal. I think that changed a lot of estimates. If they're undercounting that 100 billion and it's actually going to be like 200 billion, something like that, it really makes OpenAI at 500 billion probably look undervalued. At that point, it's trading at 5x sales, which is cheap. And, you know, if that's the case, then you're likely going to get some more momentum out of OpenAI over the coming years. So that's what we got. All right, 3 minutes until the market opens. Thank you, everybody, for being here. We got a lot to talk about after these overnight markets. I think we're going to get some big moves up and down, but S&P is up 0.3% in the future, so there's nothing too crazy to expect. Bitcoin and Ethereum tried to make a little bit of a move, but you know they're not making too much move. So we're going to see in the next 2 minutes how this market opens. Trump just finished his CBS interview, so I'll get you some quotes from the interview. I can't play any clips because CBS is like really strong on the copyright, but I'll get you some data on the new quotes that we have from Trump. He talked a lot about China. And so the markets could be pricing in a little bit more of geopolitical stability versus instability in regards to China as well. Honestly, the most important thing about November, it's not even really that the overnight markets are about to open. It's not Buffett's cash pile. It's not OpenAI. It's not NVIDIA. It's really not anything other than the fact that we have a new candle for November, folks. Almond croissant. Almond croissant. Look at that. Look at that. Almond croissant. Smells gorgeous in this room, dude. Smells absolutely gorgeous. Smells absolutely gorgeous as we get into the overnight markets. I was doing the vanilla fleur thing for a while, but it's time for some almond croissants. Almond croissants as we get into the overnight market. That is how you say croissant. That's the French way, okay? I'm not saying it in the gringo way. I'm saying it in the way that a croissant was meant to be said. All right, 30 seconds. 30 seconds. Let's see what we got going on. Tomorrow, again, will be the first trading day officially of November 2025. We got the overnight markets right here. And we are following up 6 green months in a row. Bitcoin just fell below 110, by the way. Goodness, 110.7 down to 109. We're going to see what ends up happening with crypto going into November. But we are officially starting the overnight markets here today. All right, 5 seconds. Let's see what we got. Overnight markets for November are officially open. Here we go. By the way, sorry if I'm late for a lot of people. We had daylight savings in the United States. I know that kind of messes up the time for a bunch of people in the international parts of the world. But yeah, so now we will officially be starting every Sunday at this time for you guys. S&P, that's up 0.7%, 684. We got a green S&P. SoFi is up about 0.74% as well. AMD, that's up 1.12%. Hoodie, 148. That did have a 6% move on Friday, which was very nice to see. Palantir, 203. That's up 1.2%. We will do a little bit of a Palantir preview. We did have Palantir Weekly. For those that want to get a bit more in-depth on the numbers, you can check that out that we did on Friday. NVIDIA, that's up 0.97%. Now, I'm happy that NVIDIA is up almost 1% because Trump did say in that CBS interview that I talked to Jensen, and essentially he said that we agreed that Blackwell should not be going. Well, he agreed. I don't know if Jensen agreed that Blackwell should not be going to our biggest competitors. I don't know what that necessarily means for Blackwell chips, and I definitely don't think we're getting China revenue anytime soon. Jensen did have another interview that we'll look at it well in a little bit, but Trump did kind of signal that, you know, maybe Blackwell is not going to be going to China anytime soon. So the fact that NVIDIA is actually up and not going down on that, I think is nice to see. AMD right there, 259. That's up 1%. The Googs back at 282. That's up about 1%. Grabs up a couple cents. Reddit is down 0.14. Amazon had a great week. It didn't get the close at 250, but 245 is better than what it was at 212 for the majority of the past month. So nice to see that for Amazon. Meta, I am doing a lot more work to understand Meta's multiple. It's up about 1%. I really am leaning towards this dip is going to look stupid in a year. But then again, there is an execution risk on this CapEx stuff that I keep thinking is stupid, but then I keep thinking, well, you know, maybe the market's right about it. So I'll have some updated thoughts on Meta throughout the week, but I don't know. My gut says it's a buy at these. And even if it goes back to 600, okay, you DCA at 600 and you hold on for the long term. So we'll talk more about Meta. PayPal right there, that's up 0.4%. SMCI, that's up 1%. Ethereum getting nuked right there, dude. Bitcoin and Ethereum were making a run about an hour ago, and now it's getting hit. Bitcoin right there, 109.6. Someone's obviously dumping right here. Ethereum, 3860. App Lovin, that's up about 1%. Pinterest is up a little bit. Enphase is up a little bit. Where is Iran? Iran is up 1.3%. Not too bad. Nebius, again, did a deep dive on that over the weekend. I'll put the link in the chat. I know a lot of people have been waiting for the Nebius deep dive, along with Grab, that is officially posted on the Substack. Nebius, 132. Not too bad. There you go. Nebius up 1% right here. DoorDash is flat. Nubank is relatively flat. Palo Alto Networks is down a little bit. CrowdStrike had a big run last week, 543. That's also flat. MicroStrategy right there, 270. And then Hoodie, 148.70. How about Oracle? Oracle got wrecked last week at 260, back at 265. So that's up a little bit right here. Beyond Meat is up about 2%. Where is Hims? Hims is 46.54. This one got hit below 50 and really hasn't been able to recover over the past week. That's up about 2.38%. Jensen. Okay, so Jensen did say China was opened up by the New Deal, and we're going to listen to Jensen in just a second about what he said. But then Trump said that Blackwell shouldn't be given to our competitors. So it's I don't even know if China's officially signed on to this deal. The Trump White House put out this big statement yesterday outlining all the terms of the agreement. But I don't know if the Chinese have officially agreed to it. So we'll talk about the terms. I don't know if NVIDIA is able to sell to China yet, but hopefully we get that clarity over the coming weeks. And we're going to see what happens right there. BMNR flat, 46.58. It probably would have made a little bit of a move had ETH not taken a little bit of a tumble just now. VIX is relatively flat, and then BABA, that's also up a little bit. Microsoft, look, the reason Microsoft got hit last week is because they took a $4 billion impairment charge for OpenAI, which I don't know why the street is that upset about, given the rest of the business was absolutely on fire, including Azure growing at 40%. But you did get Microsoft fall from about 540 to 520. That one is basically flat in the overnight markets. Palantir, are we at 204? We are at 203.5. We'll talk more about Palantir at the end, and I'll give you guys my thoughts on what I'm expecting. But Palantir's tomorrow, Grab's tomorrow. I mean, it's going to be a pretty wild day. And then you got AMD on Tuesday, and then on Wednesday you got Hood. So this is going to be a wild, wild week. Last week was big for big tech, and this week you don't have big tech companies, but you have a lot of companies that a lot of people care about. And we'll be covering all their earnings. S&P 500 right there, 684.61, up about 0.37% in the overnight markets. All right, cool. So let's get into it. We got a lot of headlines again. Thank you, everybody, for being here. Happy Sunday. This will be the new time. It's still 7:45 Eastern for me, but because of the daylight savings time, it's going to be, I think, an hour late for you guys, even though we gained an hour. So it's going to get dark on the Northeast pretty quick now. But that is the function of daylight savings time. Okay, cool. So let's get into it. I think let's start off with this Jensen interview, because this probably frames a lot of stuff that we got to talk about. So this was Jensen. He was on Fox this morning, and this is everything that he had to say about China, Trump, what's going on. We got some Basent clips as well, and then we'll get into a lot of deeper. I found a lot of charts this weekend about some of the stuff that's going on in the macro. That's definitely, it makes your head turn, and I'm trying to rationalize it and make sense of it. So I'll share it with everybody, and we'll see what you guys think. Here is Jensen this morning, and then we'll keep going from there.
Welcome back. A string all but it has
invent computing and started this complete AI platform shift. And now the industry is off on a decade-long build out. And so really excited with the achievement.
Tell me about manufacturing this Blackwell chip in Arizona, Jensen. How difficult was that to achieve, to bring such an important chip production here to America?
Well, first of all, AI is an industrial revolution. And this is the most important technology of our time, potentially the most important technology of all time. And when President Trump first took office, he wanted us to manufacture these critical technologies onshore. He wanted to reindustrialize the United States. He wants to have energy growth. He wants to make sure that the United States is a leader in artificial intelligence. And in order to do so, we need to lead in energy. We need to lead in chips. We need to lead in building AI infrastructures and factories, including lead in building AI models, of course, but also using AI in all the different applications in various industries, from healthcare to manufacturing to robotics to, science and industry. So he wanted that in his administration, and he wanted it at the speed of light. And so I told him that we would bring manufacturing back within 9 months with the partnership of TSMC, which is an incredible partner for the United States. Foxconn, Wistron, Amkor, and Spill, we've been able to manufacture now the most advanced AI chip in the world completely in the United States and Arizona. The workers worked incredibly hard. The mechanical engineers, the electricians, the plumbers, the construction workers, they all worked around the clock. 9 months later, we're now in volume production of the most advanced AI chip in the world.
Is it much more expensive to do it in the United States versus Taiwan?
It is more expensive to do it in the United States, but we're going to get better over time. You know, re-onshoring manufacturing and the first plant of its kind, it's going to cost a little bit more money, but that's okay. The national security benefits, the supply chain resilience benefits, the job creation benefits here in the United States. You know, we're going to manufacture chips, systems, and those systems are going. These AI supercomputers are going to go into what are going to be AI factories, which are going to be used by every single industry in the United States. And so this is going to create over time, you know, my guess is millions of jobs, and really, really high quality jobs, you know, from really skilled tradecraft. And
so you got Jensen obviously very excited about the American manufacturing and reindustrialization part, and that is what Trump wants to hear. Here's what he had to say specifically when he was asked about what this means for the China part of NVIDIA's business.
Will suspend the implementation of relevant export controls. What does this agreement mean for you and NVIDIA with regard to selling to China?
Well, what an achievement. This is a milestone meeting, a milestone deal, a historic deal. And the readouts from all the news that I've read, just the respectful, the friendly relationship that they've built between the two presidents and, of course, between the two countries, therefore. The post from Secretary Hegseth and all the readouts from Secretary Bessent have all been extraordinary. You know, this really creates the conditions, I hope, for NVIDIA to be able to go back and compete in market in China. Trump 45, in President Trump's first administration, he set the tone perfectly for America to lead in technology and make sure that American companies have the best and first, but for American technology companies to go around the world to compete and win. In the last 4 years, the administration really set us on a path that really backfired. The policies have really backfired. From a 95% market share in the China market, which is one of the most important markets in the world, when President Trump left office, NVIDIA's market share in China is now 0%. And so this is really time, and it's a great opportunity for us to reset back to the Trump 45 policies. For the Trump 45 policies where American AI companies are able to go to China, compete in the marketplace, and be able to diffuse and proliferate American technology standards around the world so that we could set the global standards, so that the world is built on American standards so that we could lead the world. And so I think creates the conditions for us to do that. I hope we're able to revert back to the policies of the Trump 45 administration and get back into the market and compete.
So that was the comment by Jensen. A lot of people interpreted that as China's coming back. Obviously, he did not say China's coming back. He's saying hopefully the implications of the Trump and Xi deal will lead to China revenue, or will lead to China market share, hopefully coming back for NVIDIA, because right now their market share is 0. And then 20 minutes ago, you had this from Trump, which is why I was surprised NVIDIA is actually up in the overnight markets, but this is exactly what he said about Blackwell.
NVIDIA?
Yeah, they're smoking Joe. What about it?
So are you planning to meet with him? You said when you were...
I meet with, look, he's one of the great geniuses of our time. His chips are 10 years ahead of anybody else's. And, you know, I meet with him all the time. It's a great American company. It's now the biggest company in the world. So what would you like to know?
So
I mean, NVIDIA is really just a brilliant company. The chips are 10 years. The new Blackwell that just came out, it's 10 years ahead of every other chip. But there's nothing to meet with other than say, congratulations. But no, we don't give that chip to other people.
Are you meeting with the Syrian president?
We don't give that chip to other people.
Are you meeting with the Syrian president at the White House?
That last sentence, we don't give that chip to other people. So look, maybe Trump is just saying that because he wants to get a little bit more of a negotiation on what we get with China. But as you can see, he clearly said, we don't give that chip to other people, which means the Blackwell chip is likely not coming back in terms of revenue if this is a similar stance that Trump is going to have on NVIDIA. So even with the praise of NVIDIA, even with Jensen bringing GTC to DC, even with Jensen obviously praising the Trump administration and saying that he believes in this whole American reindustrialization, if Trump is not ready to give the Blackwell chip to China, I would imagine China wants the chip, and China has already said back in the summer they don't want anything less than Blackwell, because if you give them something less than Blackwell, then they might as well just build their own chip, which creates the entire problem that Jensen's been talking about for American technology not being the foundation for overall AI technology around the world. It comes down to Blackwell. And, when we create Vera Rubin, when that officially goes live with NVIDIA, and then we give them Blackwell, I'm sure the Chinese are not going to be happy about that. So, we don't fully have any details on what's going on with NVIDIA, but at least the market so far, because of the $500 billion opportunity that Jensen talked about last week, and excluding any of the guidance from China over the next 5 quarters, I think the market is overlooking that, which is like a good thing to see rather than a bad thing to see. So that's what we have in the context of China and NVIDIA. Now, what actually happened with the trade relations? So this came out last night. This was published on the US.gov website. And this is exactly what they said. The Chinese are going to suspend new rare earth export controls. They're going to issue general licenses for exports of rare earths. They're going to take significant measures to end the flow of fentanyl to the US. They're going to suspend all retaliatory tariffs since March 4th, suspend all retaliatory non-tariff measures since March 4th, and purchase at least 12 million metric tons of US soybeans. The U.S. is going to lower tariffs by 10% from 57 to 47, extend the expiration of Section 301 tariff exclusions until November 2026, published by the White House yesterday. So nothing in that says that China will officially get Blackwell, but I think it's giving the market a lot of ease now that there's not this massive trade war that might break out towards the end of the year. Obviously, the Chinese have to confirm this, but I think they already bought some soybeans as a sign of good faith. And, given the negotiations that happened last week that we covered, it seems like everything is relatively okay. And the export controls on rare earths that kind of really got everyone scared globally might not be happening. And as a result, that might be the good thing. Now, a lot of people are saying, what does China get from that deal? It's a good point, because outside of the tariff reduction, I don't really know what China's getting from that deal. They get access to the U.S. consumer, which is very important, and their economy needs that because they've been in a recession over the past couple of years. But yeah, it is confusing, right? And it's been confusing for the past couple of months. Like back in June, Trump said we had a China deal. We obviously didn't. And that China deal was centered around allowing Chinese students to be able to effectively go to Harvard, which made no sense at times. How is that the basis for a deal? So I don't think we're out of the woods yet on this US-China situation. The markets are definitely a bit more calm about it. And, maybe the markets would have been up a lot more last week, passing through that 690 level. If we had some real legit concrete things that we for sure knew was going to happen with China and the US, but we have somewhat of a framework. And hopefully that framework is not the worst thing in the world. They get some soybeans. Yes, they definitely get some soybeans. Meta right there taking a little bit of a dip, 652 from 655. You got the S&P 500 right there at 684. So that's the update on NVIDIA. It looks like Blackwell's not going to China yet, but the overall China-US tensions seem to be at ease, which is what we need to get S&P 7,000. You need a big tech earnings to dominate. They did. We got NVIDIA coming up. We got some of these other countries. But now if we can get China to do well, then that would be very important. Having said that, let's talk about Besant. So here's Besant talking about the general state of the economy right now. And the reason this is important is because a lot of stocks last week took a hit. And we're going to talk about those stocks in a second. But a lot of those stocks are more consumer-oriented stocks, showing maybe there's some issues on Main Street, even if not on Wall Street yet.
Fed voted to lower interest rates another 1/4 point to its lowest level in 3 years. However, the central bank's newest official, Stephen Myron, is warning that if the Fed doesn't continue to lower interest rates rapidly, the U.S. could face a recession. Do you agree that the U.S. is at risk of facing a recession?
I believe that we are in a transition period here, as we are seeing the Trump administration has cut back on government spending, Jake. What has gone unnoticed during the shutdown is for the fiscal year that ends September 30th, the government spent less than it did the year before, and because the GDP grew, the GDP, which had been 6.4, the deficit to GDP, which had been 6.4, 6.5% deficit, the highest when we weren't at war, weren't in a recession ever, we were able to bring it down to 5.9%. So we are bringing down government spending, and I would think that the Fed would want to assist with that, because if we go back and look, MIT just published a study that said 42% of the great inflation of 2022 came from excess government spending. So if we are contracting spending, then I would think inflation would be dropping. If inflation is dropping, then the Fed should be cutting rates.
Also, if the labor market is weak and people are losing jobs, they're not spending as much, which should also help to create a little bit more deflation, which is another reason the Fed should be cutting rates.
But do you think that the U.S. is at risk of a recession if the Fed does not continue to drop rates?
I think that we are in good shape, but I think that there are sectors of the economy that are in recession, and the Fed has caused a lot of distributional problems with their policies. I wrote a 7,000-word essay on that. We've seen the biggest hindrance for housing here that are mortgage rates. So, if the Fed brings down mortgage rates, then they can end this housing recession. Low-end consumers who have gotten killed under President Biden, these high rates are hurting them because they have debt, not assets. So I think that there are sections of the economy that could go into recession.
All right.
Okay, now why is that really important to understand? Well, I'm about to show something right here. And for those that haven't seen this aggregated data, it's actually really, really important to take a look at. So take a look at this right here. These are the year-to-date returns on some very important consumer stocks. Chipotle, we all saw last week what happened with their earnings. The CEO literally said people making less than 100,000 from ages 25 to 34 are not entering the store as much. Wendy's was down 44% this year. I didn't even know that was the case. Lululemon, that's been a train wreck, down 54%. Whirlpool down 35%, although they did have good earnings. Macy's down 27%. Caesars down 38%. Under Armour down 36%. I mean, it's a little ugly when you look at these consumer stocks. Here's another chart that shows even more. The Campbell's Company, General Mills, Kraft Heinz, Colgate, Procter & Gamble. These have been the worst performing stocks of the entire year. So there's two kind of nuanced points around this. Number one is, have these companies been the best companies in the world? Probably not. I would imagine NVIDIA, Microsoft, Amazon, Google, et cetera, are executing a lot better than Procter & Gamble and Lululemon. So that's the first point. But second of all, the reason I think people are starting to wonder what's going on with the consumer is because these are consumer-oriented companies. And it's not just Chipotle. There's a lot of other fast food brands. I mean, Shake Shack, which is not really for the low end of the consumer, but their stock has been hit all year. And, Shake Shack tends to do relatively well, even with middle-class consumers. That's not been doing that great. So the question is, what's going on in the economy? And we've been talking about this for a long time. As Gerald says right here, people are definitely hurting. And I don't think even if we are asset holders, we can ignore the fact that obviously people are hurting in this economy, which is why Basant was asked this question. Wait a second, if we don't cut rates and you're seeing Chipotle take a 45% drawdown this year, 20% in a week, like what's going on for the low end of the consumer that likely needs to get a little bit of relief on their personal loan payment to refinance it, or their auto loan payment? Auto loan delinquencies have not been the best, especially subprime, in regards to how they're going to navigate their expenses. And obviously the answer is that at least what the Fed's disposal is going to have is lowering rates. So I think this, along with what's going on with the labor market, is not to say that the economy is in a horrible situation. It's just to say we as investors cannot ignore that there are factions of the economy that are not doing well. In 2026, there's going to have to be some level of turnaround, either internally with these companies, if it really is just a company thing. But when you look at a chart like this, these are all consumer brands. And a lot of these consumer brands are not Louis Vuitton. These are not brands that are trying to sell a shirt for $10,000. These are companies that are selling relatively cheap products that have not been able to get their stock to do well. Yeah, Deckers is another stock. That's an example of this. And so as a result, I think it's something that really does matter. We cannot forget about it. It could come back to bite the stock market in the ass in regards to, do we have the earnings growth to continue this momentum? And we do. That's been a big theme of Q3. Earnings growth has been really damn good. 80% of companies in the S&P 500 are beating. But then you have these consumer names that just aren't doing that well. Having said that, this leads into the conversation around the wealth effect. Here's a 2 to 3 minute clip from the Compound and Friends this weekend talking about this idea of the wealth effect, because again, that is why it looks like the economy is holding up.
I want to double click on that because this is the hill that I like to die on every week. I'm a wealth effect truther. I think it's the number one most important factor in the economy, bar none. It decides employment. It decides whether or not people get wage increases. I think it decides CapEx spending projects. Nothing will halt AI CapEx in its tracks faster than a stock price that falls 30% after an earnings disappointment. Nothing. And so as a result, I really think we underprice the ability of the stock market to influence things that happen in the real economy. More Americans than ever are in 401ks. I understand housing is a bigger asset for the middle class, blah, blah, blah. I get all that. The people that work for people, though, those people, they care about their stock options in the companies they work for. I think it's a huge driver. To that point, Sean and I, on my research team, we write this column for CNBC Pro every week, best stocks in the market. And we're always looking for charts that invalidate things that we believed or things other people believed. We love that more than anything. We did a spotlight on Ford and GM today. Ford and GM made 52-week highs this week.
Yeah, what's the story there?
The story there is the wealth effect is what sends people to the dealership to buy a new F-150, not trade war bullshit. These companies have handled this tariff situation so well, not because they're in control of the prices of the supplies they buy, but because the demand never let up.
I think this is a really important point. Ford and GM GM has at least outperformed Tesla this year. Ford's basically trading at a 2-year high. Why? They're able to sell more cars. Why are they able to sell more cars? Because people have more money, not just because of their paychecks, but because they're holding on to assets, even if it's just their 401k. They feel richer. That's the whole concept of the wealth effect. And they're able to buy more cars. And those cars are relatively cheaper than a Tesla. So, I mean, from that perspective, you ask yourself, how is GM going up 20% in a day like it did 2 weeks ago? It might be because of this wealth effect.
The demand never let up because everyone's stock portfolio is at a record high. So GM is selling, GM's in a better situation than Ford. They're selling more higher margin SUVs. Ford has a lot more execution risk and it's not as good of a stock. They don't do buybacks, they do dividends, blah, blah, blah. But the big picture is both of them are at 52-week highs. If I told you in March, next month, Trump is going to restart the trade war and auto parts and finished automobiles is going to be like the epicenter of the trade battle with all these countries, you would not have said, oh, I get it, therefore buy Ford and GM. They're up more than Tesla this year. People don't even understand that. And so my point is, that's the power of the stock market wealth effect.
And so, look, I think it's a good point. I think it's something we cannot ignore. And what's really important is another stat from the show that was just very intriguing to me. People in their early 30s, or I think it's mid 30s, 35 years old, their percentage of equities as a percentage of their net worth in this generation, so I guess millennials, you can call it, 23%. So if you are around 35 in that, early 30s range, mid 30s range, 23% of your net worth on an aggregate is in equities. For the boomers, when they were 35 years old, it was 7%. That is a massive difference, right? And so when you have a stock market with technology stocks that are leading the way, most people 35 and younger, right? NVIDIA, Tesla, Amazon, the companies that they actually understand, the companies that they can see the technology in front of their face, those are the companies they're investing in. Those are the companies that have gone up. Those are the companies that have done well. So when 7% decades ago, as a result of your net worth was in equities versus 23%, it makes a vast difference on the level of wealth, or at least the perception of wealth that people think that they have. And that is why when you look at a chart like this is all these consumer brands are down, but the stock market's up and people are willing to spend even more. It's because these companies are executing at such a high level and they have so much allocation to these companies. Take a look at this. The combined revenues of the big four US tech companies, Amazon, Google, Apple, and Microsoft, hit a record $1.8 trillion over the last 12 months. Amazon at $691 billion, Apple $416, Google $386. Microsoft 294. I'm working on a Substack piece coming out in the next week about how the big tech companies might be the easiest investments of our lifetime. And when you see charts like this, and then when you see that most people have allocation to these companies, not Johnson & Johnson or Procter & Gamble or Lululemon, but rather Amazon, Apple, Google, and Microsoft. Apple hit a new all-time high last week, which is just wild, given that they're not growing that much, but still the multiple gets baked in because it's Apple at the end of the day. It's just incredible to see. And so as a result of that, when Besant says the Fed's probably got to keep cutting, and when all of us start wondering, are we going to get this December cut? I mean, I think it was laughable. And I genuinely think it was laughable last week that Powell started off the press conference by trying to stress that this December cut is not going to happen. Right now, the probability for a December cut, it's going to be December 10th is the meeting, is 69.3%. That number was 90% before Powell went on stage and said, don't expect a December cut is in the books. It's in the books. We know the labor market is weak. We know that the bottom end of the consumer is obviously struggling and they're going to need some type of relief, aka rate cuts. Also, it takes 12 months for a rate cut to even have any effect on the economy. So the idea that we're going to delay more rate cuts because we think, we have all the time in the world, it's like, no. Also, I mean, I heard this the other day. I forgot where I heard it from, but I think 2% is the new 3%. Or rather, I should say 3% is the new 2%. Like when we talk about the Fed's inflation target, we're not getting to 2% anytime soon, unless we have massive deflation from like AI or, the labor market really gets that bad. If we stay steady at 3%, which isn't the worst thing in the world, 3% might become the new 2%. And even if the Fed doesn't explicitly acknowledge that their target has shifted, we all kind of know their target has shifted, which at that point means we're likely going to continue to get some of these rate cuts. So that's what we got in the context of the consumer and what's going on with the broader economy outside of just Wall Street. And we're going to have to see over time how these earnings can continue to develop to make sure that the consumer stays strong and that the economy as well stays strong. Let's get into some charts about November. So November tends to be pretty damn good. Take a look at this. Since 1927, the S&P 500, the S&P 500 has ended higher 59% of November. So 59% of the time, you tend to get a higher November that is actually a much higher rate than October. During these years, the index averages an average of returned an average of 1%. The NASDAQ 100 has seen 2.4%, the Russell 2000 2.64%. In year one of a U.S. presidential cycle, which we are in right now, 25, November has also been strong with the S&P 500 going up about 0.67% of the time. It's up 0.67%, 67% of the time. I know the 6 sevens, I get it. I'm going to see thousands of those in a second. But ironically, the S&P rises 67% of the time, up 0.67% on average in November. Since 1950, the S&P 500 has been up more than 15% year to date. Heading into November, it's returned 2.7%. Right now, the S&P 500 is up 18%. So historically, we could get a 2.5% month going into November, which would put us well over 7,000. Tom Lee still thinks we're going to get to 7,000. He does think it's going to be a bit choppy before we get there. The first 2 weeks of November, he thinks the gains have to kind of settle in, which makes sense because you have NVIDIA at the back half of November. So it might take some time before we end up getting the earnings results from NVIDIA to bake in. But if it is choppy, it likely is a buy the dip scenario like it has been all year, as November tends to do well and as we're probably going to get that rate cut. So, I mean, there's a lot of reasons to be optimistic around November, and it doesn't look like November necessarily has to go bad. Gold is back below 4,000. Silver's at 48. So you got gold that fell all the way down to 39.60, and now it's making a move back up to 39.97. So just below 4,000, but not necessarily too much below 4,000. Speaking of gold, India has been one of the largest gold importers this year. India's gold imports surged 7.8 billion over the last 3 months, the second largest on record. This is triple the amount recorded in the prior 3-month period. And the Reserve Bank of India, we talked a lot about these central banks increasing their allocation to gold, has increased its gold holdings by 25 tons so far in 2025, reaching 880 tons, an all-time high. So look, I don't know if gold is going to be the ultimate hedge going into 2026. It is a bit weird that gold has been going up and the 10-year has been going up as well. I mean, the 10-year was going down for a bit. Now the 10-year kind of selling off, 10-year down a little bit right here in the overnight markets at 4.083%. But nonetheless, it doesn't look like the move on gold is to be faded, at least yet. And if it gets a rebound back to 4,400, I think JP Morgan is 5,000 by the end of the year. It doesn't seem like people are going to be too afraid of what we've got going on with gold. Bitcoin and Ethereum. Then let me get to some of these Trump quotes because we got a bunch of them coming in. Bitcoin right here, 109.7. and Ethereum is at 38.49. So Bitcoin and Ethereum relatively red. I mean, they were up a bit and now they are back red. Okay, before we get into some other topics, Trump quotes. I'm getting them in right now. So let me give you guys some of these quotes again. We can't play these clips because CBS gets like super aggressive with copywriting. But interviewer says, will you pull forward a healthcare plan? Trump says no. Interviewer says, since 2015, you've said you fixed it. Trump said, we almost did it. So no plan on healthcare, at least yet. Trump on if the Supreme Court rules against him on tariffs. He says, I think our economy will go to hell. Interviewer, why did you pardon Binance's CZ? Trump says, I don't know who he is. Interviewer says his crypto exchange, Binance, helped facilitate a $2 billion purchase of World Liberty Financial stablecoin. And then you pardoned him. World Liberty Financial is the kids coin. Trump says, here's the thing. I know nothing about it. I genuinely think Trump has no freaking clue who CZ is. He got told to pardon him and he was like, all right, crypto, cool. That's probably what we got to do. So Palantir right there, 204.06, S&P 500 at 684. Interviewer then says, how big of a threat is China? Trump says it's like everybody else. We're a threat to them too. Many of the things you say we do to them, they would do to us. This is the exact transcript from the interview that I'm looking at right here. On Xi and Putin, Trump said they're both very strong leaders. These are people not to be toyed with. You have to take them very seriously. They're not walking in saying, oh, isn't it a beautiful day? These are serious people, tough leaders. On Venezuela, Trump says, interviewer says, are we going to war against Venezuela? Trump says, I doubt it. They emptied their mental institutions and insane asylums into the United States. On a third term, interviewer says, can you set the record straight? Are you going to run for a third term? Trump says, I don't even think about it. I will tell you a lot of people want me to run. Trump's been more explicit about telling people he's like, not really thinking about a third term. So I know that's a rumor that's out there, but I don't think Trump is like seriously thinking of making that run. All right. So we don't have any crazy quotes that it's affecting the market. Nothing Trump said that is that concerning. I don't see any NVIDIA quotes here either. He was asked also about Taiwan and what would happen if China invaded Taiwan. And he said, they're not going to do that when I'm president. And Xi knows how serious of an issue that would be. He also said that when they met in South Korea, they didn't even bring up the topic because they know how serious it would be if they even attempted to do something like that. And they have a lot of respect for me as a president. So in terms of, I guess, the China-Taiwan situation, Trump thinks that you're likely not going to have that much of an issue. Here is what Besant also said about rare earth stocks, which was another really important thing when it comes to China.
I think it's naive for the Wall Street Journal editorial board, who I call a bunch of grumpy old men, to think that the Chinese weren't going to roll out these rare earth restrictions. They've been putting this plan together for 25, 30 years, and the U.S. has been asleep at the switch. And now this administration, we're going to go at warp speed over the next 1-2 years, and we're going to get out from under the sword that the Chinese have over us, and they have it over the whole world. And this time, we have rallied the allies, and so it is going to be all the Western democracies, the Asian democracies, and India are also going to join us in this in trying to form our own supply chains. We don't want to decouple from China, but we need to de-risk. They've shown themselves to be an unreliable partner in many areas. I think it's naive for the Wall Street Journal editorial.
So Besant seems pretty confident on rare earth exports not being as bad as what the media thought it was going to be over the past couple of weeks, based on the Trump-China fact sheet that was released over the weekend. It seems like China is going to be stopping the ban of their exports on rare earth controls, which is really important. And overall, it seems like rare earths, which really kind of made the market get scared of the past couple of weeks, might not be that big of a deal. NVIDIA right there, 204.44. Tessie's up a little bit. Palantir, 204.12, 204.35. I think, 204.18 is the all-time high. I think we might have touched above that in the overnight markets. And then you got Robinhood right there at 149 as well. So overnight markets, green, S&P 500 up about 0.34%. All right, I want to do one more segment, and then we'll end off the show today with Palantir and Grab earnings predictions. We're going to do a Robinhood earnings prediction tomorrow with Roy and Tanner on Tech Bros, so I'll save my thoughts for tomorrow on that. But we do have Palantir and Grab tomorrow, so we'll talk about that in a second. Real quick, before we get to this segment, a little bit more on the Sam Altman stuff. So I played that clip in the morning of him going viral, kind of being a dick to Brad Gerstner, talking about the investment commitments that they've had. Then Elon said you stole a nonprofit because Sam Altman tweeted this picture of like his Roadster that he paid $50,000 for, never actually coming out because the Roadster was never delivered. And so Elon responded and said, "Hey, you stole a nonprofit." And then Sam says, I helped turn the thing you left for dead into what should be the largest nonprofit ever. You know as well as anyone, a structure like what OpenAI has now is required to make that happen. You also said you wanted Tesla to take OpenAI over, no nonprofit at all, and you said we had a 0% chance of success. Now you have a great AI company, and so do we. Can't we all just move on? I mean, again, you got a lot of people that love Sam Altman because they hate Elon, and then you got a lot of people that really despise Sam Altman because, you know, they just don't think that he is the most ethical actor. Again, he kind of started it with posting this, showing his Roadster reservations never like coming to fruition, and that's when Elon commented and said you stole a nonprofit, and then that's when Sam clapped back. So, billionaire drama for us to all take a look at. But at the end of the day, if XAI wins and OpenAI wins, that's the most important for all of us, regardless of if you like the guys or not. And they kind of have to win, because if they don't win, we are, to be honest, we're all screwed. Like, we need these companies to survive in the age of AI. Yes, as Cactus Jack says right there, can't we all just have fun and drink mocktails? Also, a Cactus posted right here that soybean futures are at a 15-month high. So shout out to the Chinese. They got the soybeans pumping, as they are now committing to buy more soybeans. All right, so let's get into this last segment, which has to do with layoffs. So there's another chart that's been going quite viral over the weekend that I think is pretty important to look at. And, you know, it goes back to this argument about what's going on with the labor market. So take a look at this. S&P 500 in the black, and then total job openings in the blue. ChatGPT is in the middle right there, November 2022, when it officially launched. As you can see, the S&P 500 is going higher, and for all of us that own assets, we are getting richer. The job market is getting worse, even though employment is still below 5%, which is historically not bad. But as you can see, total job openings are going down. And as a result, it's one of those things where people are starting to wonder, wait a second, is this damn AI thing going to make shareholders rich, but going to leave everybody else poor because no one's going to have a job, which eventually will hurt shareholders at some point. And I don't know, but based on a chart like this, it seems rather obvious that this is playing out. Here's another thing right here to take a look at. So Amazon.com employees, this is from the Wall Street Journal, as you can take a look right there, along with Microsoft, is down. Amazon is down from 2021 after the recent round of layoffs, which likely some more layoffs are coming. And then Microsoft is down 6% from the peak. It seems like the total amount of jobs that the big tech companies have used to employ has reached a peak. And I think it is very unlikely, like I'm just looking at these charts and then anecdotally looking at what's going on in the world of AI, it seems very unlikely that the big tech companies are ever going to have more employees than they had back in 2021. For two reasons. Number one, they overhired during the pandemic. So that was one thing that contributed to that many new employees. Number two is like, they just don't need that many people. They just don't need that many people. And you know, after these day in the life videos went viral from some of these product managers that sip their Mai Tais at the pool of the company office and respond to 2 Slack messages. And I don't mean to undermine a product manager's job, but that's what some of these videos that went viral were about. And, you know, you probably have Zuckerberg's looking at these videos and being like, first of all, they're posted on TikTok, not even Instagram. So Zuck's like, all right, so you're posting on our competitor. Number two, Zuck's is like, well, do we really need that person? Do we really need that, you know? And so I don't know. In the age of AI, it seems very difficult for me to imagine that we are actually going to have the amount of jobs that we've had open historically. And it's going to be an interesting experiment for all of us to kind of play out. Here's another chart that exemplifies this. So this is the ongoing share of U.S. tech jobs that are located in California, which is the tech capital of the world. There are fewer tech jobs in California today in 2025 than during the 2008 Great Financial Crisis. Now, in 2008, the tech companies were just starting, right? Well, not just starting. I mean, like a lot of them had just IPO'd. Google IPO'd in 2005. Meta was just, evolving from a startup. I think it raised the Series A back in 2007. So the tech companies were hiring aggressively in 2008. But you would think in 2025, the percentage of U.S. tech jobs in California should be way higher than what it was 17 years ago. And that's not the case. And there's probably more macro arguments to explain that than just AI, but it's hard to undermine the fact that AI could be playing a role right here and why there's just not that many tech jobs that's needed as a percentage of the overall jobs in California. It's because they're in Texas. Well, yeah, look, that is a fair point. A lot of companies did leave to Texas. A lot of these tech companies started outsourcing to international countries, right? India being one of the biggest four. I mean, that's what the whole H-1B controversy has been over the past couple of years. So that's not only tied to AI, but it is a chart to kind of take into account when we think of the overall S&P 500's growth, which is the wealth of the United States of America, versus the job openings that, don't seem to exist at the level that they existed just 2.5 years ago when we had ChatGPT just get started. So we're going to see a lot of how this plays out, but I think the labor market is something we got to keep an eye on. I've been saying that for the past couple of weeks. It's not something I'm worried about because I'm not seeing enough data to be worried about it, but it's definitely something that I think matters. And it's something that hopefully we'll try to get as much more data as we can on the show every day. Okay, 2 more things, and then we'll get into the earnings preview. First of all, a lot of people asking about BMR and Ethereum. We talked about it last week, but just a couple quick stats on Ethereum. Highest monthly total transaction count ever for the Ethereum network in October, breaking its record for 6 months in a row. So that's just one chart that I would pay attention to. Again, more transactions on the network likely means the network continues to be more valuable. So this is good for BitMine, as this will be good for the Ethereum price over the long term. And then number 2, if you take a look at this, Chris posted this yesterday, stablecoin volume in October absolutely exploded. We had a lot of new companies introduce their own stablecoins, a lot of that being on Ethereum. I think right now it's 59% of overall stablecoin supply happening on Ethereum. And so I know Ethereum's been choppy. I know it's not been super exciting as it was back in the summer. My advice last week was if you're in BitMine and you hate that the stock is flat, and you think there's better opportunities, then you got to get out of it. I mean, if you really don't love the opportunity that BitMine is presenting you because you just don't care anymore about Ethereum and you were in it for a trade, then there's plenty of other things that probably will outperform it if Ethereum stays flat. But if you do believe in that long-term trade for Ethereum in particular, then maybe just buy Ethereum, maybe not even buy BitMine, right? Like if you're just annoyed with the digital asset treasury strategy. But if you think Ethereum is asymmetric, and this is one of the best macro trades we've seen, just given all the data around stablecoins, tokenization, et cetera, which, by the way, there's a new website that Roy showed me that is tracking all the tokenized assets on Robinhood, which is really cool. If you believe in that broader trend, then I think BitMine can be asymmetric. This is the website right here. I'll put it in the chat. But as you can see, there's 493 assets that are tokenized on Hood, and you can track the entire volume and the minting of those assets every single day. So that's right there in the chat. Okay, cool. So that's what we got on Ethereum. Let me play this one last clip. This will also give me a chance to get my charger because my computer is about to die. And then we'll talk about Palantir and Grab. This was Nadella and Gerstner talking about what the framework will be going into 2026 for Microsoft.
That investment that's now worth 130 billion, I suppose, could be worth $1 trillion someday, as Sam says. But it really, in many ways, understates the value of the partnership, right? So you have the value in the rev share, billions per year going to Microsoft. You have the profit you make off the $250 billion of the Azure compute commitment from OpenAI. And of course, you get huge sales from the exclusive distribution of the API. So talk to us how you think about the value across those domains, especially how this exclusivity has brought a lot of customers who may have been on AWS to Azure.
Yeah, no, absolutely. I mean, so to us, if I look at it, aside from all the equity parts, the real strategic thing that comes together and that remains going forward is that stateless API exclusivity on Azure that helps, quite frankly, both OpenAI and us and our customers. Because when somebody in the enterprise is trying to build an application, they want an API that's stateless. They want to mix it up with compute and storage, put a database underneath it to capture state and build a full workload. And that's where, Azure coming together with this API. And so what we're doing with even Azure Foundry, right? Because in some sense, let's say you want to build an AI application, but the key thing is, how do you make sure that the evals of what you're doing with AI are great? So that's where you need even a full app server in Foundry. That's what we have done. And so therefore, I feel that that is the way we will go to market in our infrastructure business. The other side of the value capture for us is going to be incorporating all this IP. Not only we have the exclusivity of the model in Azure, but we have access to the IP. I mean, having a royalty-free, let's even forgetting all the know-how and the knowledge side of it, but having royalty-free access all the way till 7 more years gives us a lot of flexibility business model-wise. It's kind of like having a frontier model for free. In some sense, if you're an MSFT shareholder, that's kind of where you should start from, is to think about we have a frontier model that we can then deploy, whether it's in GitHub, whether it's in M365, whether it's in our consumer Copilot, then add to it our own data, post-train it. So that means we can have it embedded in the weights there. And so therefore, we are excited about the value creation on both the Azure and the infrastructure side, as well as in our high-value domains, whether it is in health, whether it's in knowledge work, whether it's in coding or security.
You've been...
I mean, hearing that makes me want to really dive deeper on Microsoft and just say, is this company really not going to be bigger than it is today, and likely not going to rise in value as NVIDIA rises in value? I mean, I think we don't talk enough about Microsoft because it's not one of those sexy names in the Mac 7, but I think we should. And, we don't have a crazy dip opportunity like we have on Meta, which we'll talk a lot more about over the coming weeks. But he's right. I mean, look, they have exclusivity. They have their own OpenAI. They have their own API that they can fine tune to their own Microsoft models. And as a result, it doesn't seem crazy to kind of really take a look at Microsoft, even at this $4 trillion valuation, and see, hey, how much can cloud grow and how much can this exclusivity clause with AGI, along with the $250 billion that OpenAI is going to be paying for Azure, what does that mean for the stock going forward? And so that's definitely something that I think that all of us should be looking at. All right, Palantir. Let's talk about it. First of all, who's excited? We'll talk about Grab after. But Palantir is tomorrow. I think this is officially the 18th quarter I'll be covering publicly on the channel. It's kind of crazy, dude. But I am pretty excited for it. Now, the reason I'm excited for it is because I looked at the numbers over the weekend. Again, if you haven't watched Palantir Weekly, make sure to check that out. We went pretty deep onto the numbers and tried to give as much of an explanation as we can for what we think is going to happen. Seeking Alpha, that I'm pulling up right here, has the earnings estimates, and the estimates from Wall Street is 1.09 billion. Palantir basically guided for 1.09 billion. So the analysts aren't really raising the estimate from the company. They're basically betting that the company is going to come in line with guidance. And they've done this for basically the past 10 quarters. And what has Palantir done? They've beat and raised to such a degree that the analysts completely got it wrong. And it's not like the analysts have really said, oh, well, maybe next quarter they're not going to beat and raise. They continue to underestimate, which means it's totally in Palantir's hands for if they can do the same tomorrow. And if they can, I think it's going to be an exciting quarter. Now, what's going to happen to the stock? I have no idea, because the stock already made a run. I mean, I really, for the past couple of weeks, the reason I've been buying Palantir around that 170 to 185 range is like, hey, I think when the street sees 50% growth, they're going to be excited and the stock probably makes a move higher. That has already happened. So the anticipation of the move has already taken place. The question now becomes, how good is the quarter going to be to get the move to be even better than what we see right here? And if Palantir drops to 185 tomorrow, like, I can't be that upset about it. I know everyone's going to be upset and just like annoyed because it got all the way to 204. But nonetheless, it's like, if so much was priced in and they weren't able to deliver beyond expectations, which is basically what happened 2 quarters ago. Remember, we ran up to like 125 and then we fell to 108 the next day. That's when I went on Bloomberg the day after to talk about Palantir earnings. So we've seen a quarter like that before, but in Q2 that didn't happen because Palantir like really beat the estimates and they raised guidance in a substantial way. I think they're going to come into 1.2 billion. I think they're going to beat by 100 million. And I think if they beat by 100 million and we get 1.2 billion and we get closer to 25 cents versus 17 cents, again, I just like, if they grow anywhere near 55 to 57%, right now they're guiding at 50%, so they would have to have a little bit of a 7 to 8% beat. I mean, dude, like Wall Street, I think once again will say, wait a second, this is the only company that's growing as fast as they're growing. This is the only company that's actually implementing AI to make it useful. If OpenAI wants $1 trillion valuation, I mean, I know their metrics are better from a growth perspective and from a total dollar revenue perspective, but from an impact perspective, one could say that Palantir is having more of an impact. And Palantir only has 900 customers. In terms of customer count, we talked about this a lot on the weekly. This might be the first quarter where they add 100 customers. They've never added a triple-digit number of customers. I think last quarter they added 77. If they add 100 and they have more deals of at least $1 million that was added, I think last quarter they had like 150. If that gets closer to like 175, and they have that top line revenue growth of 55 to 57%, I think the stock can go higher. And I think the street will really like it. Now, am I expecting that? No, I really want to calm people's expectations down. If the stock was at 170, 180, I would be gung-ho of like, hey, I think there's going to be a move. Stock made the move already. It happens. So the smartest people tomorrow could be the people that sell before earnings. People could sell calls before earnings. Maybe that ends up working out. I don't know if buying calls going into earnings is the best idea. The expected move is 10%. Yes, they are reporting after hours, 4 p.m. So, a 10% move gets you closer to 220 or 180. We're going to have to see. We're going to have to see the numbers that they put up. I usually don't buy puts to hedge. Now, if you have a super, super big position and you really want to protect it and you're not okay with your margin of safety via your average or your covered calls, then yes, I mean, buying puts is fine because if they go to zero, the stock probably goes up. It's always subjective for how people want to hedge against it. And again, earnings is earnings, dude. Like you just never know. You really never know what happens on earnings. If the stock was closer to 170, 180, I would feel a lot more comfortable saying, hey, I think earnings is going to be really good. But the stock's made the move. So the question now becomes how good of a beat can it be? And over the past quarter, it's not like there's not deals in Q3 that weren't substantial. Arnie did a good recap on Twitter showing off all the different Q3 deals. And it was massive. We had that $1 billion deal with the UK for their Ministry of Defense. We had a deal with Poland that might be Q4, but that could have been signed in Q3. You had a $100 million contract from the IRS, $100 million for next-gen common control with Anduril, $25 million in Germany, 5-year expansion with Lear to globally use warp speed. You had that Lumen contract that might have been signed in Q3, even though it was announced in Q4. Sampo, multi-year expansion, Fujitsu extension in AIP in Japan, Babcock, which is a a British defense contractor deploying warp speed. I mean, you have partnerships and partnerships and partnerships. Deloitte, Accenture, Blueforge. Does all of that lead to like 60% growth? I mean, I don't know. Karp was pretty excited when we saw him on Fox News. I mean, he smiled when he said we are growing very well. So every single time we've had earnings, basically for the past year, the company has defied expectations, beat the analyst expectations, beat the retail analyst expectations. All of us, I think, are a bit smarter than the analysts, and even they beat our most bullish case for the earnings. And so I think that could happen again tomorrow. But if it doesn't, it doesn't. So I don't want to get people too excited because the stock has already made a move. But if it does happen and we bust up to 215, 220, and then we normalize in the 200s, I mean, that would be a pretty fun way to end out 2025. And yes, the Jensen NVIDIA deal was very important. There's a ton of different catalysts that have been happening. The Karp has this book that came out. I put out the interview over the weekend with the author of that book. I mean, like the overall brand of Palantir and Karp has grown so substantially that you would imagine a lot more people are excited about the name, the stock, and obviously the growth rates. If they can deliver the numbers, that's going to be really important. If adjusted operating margins get closer to 47%, I think they were at 44% last quarter, that's important. Free cash flow margins continue to stay at 60%. Customer count, again, getting that triple digits on number of customers added, top line revenue growth, 57%. Like if we can really pull up these numbers, which I think we're going to get most of these numbers, maybe we don't get all of them, but if we get most of them, that's when I think the stock could explode. But it could also be one of those things where the numbers are great, like it was in Q1, and then the stock sells off, which we all experienced, and fell to $108. And it was a great quarter. They grew 39%. Maybe Wall Street wanted 40%. Maybe now Wall Street wants 58%, and they grew at 54%, right? Which 54% is not bad growth. It's just not might be enough for the street. So we're going to see. We're going to see how this plays out. I am very, very excited to see what happens with Palantir. I'll be live covering it as always. These are all the earnings that you can expect for next week. You got Palantir, Uber, Shopify, Spotify, McDonald's, Lemonade, Robinhood, DocuSign, Unity, Celsius, D-Wave, Oscar, SoundHound, Airbnb. I mean, it's going to be AMD, SMCI. It's going to be a pretty massive week for earnings. And we're going to be taking a look at everything that we have. Amit, you were cautious this time before earnings. Yeah, I was. Because look, at the end of the day, the stock made a move last time before earnings as well. So it's like, I think it's only responsible of myself personally as an investor when a stock makes such a big move going into earnings that you temper down the expectations a little bit. And I think any company would agree that it's like, look, if our stock's making a 15% move before the implied 15% move, that means everything we say has already been priced in, which means we've got to come out with something even better than what the analysts are expecting to get that 15% move to the upside. If not, it ends up falling flat, which is literally what happened in Q1 of 2025. And in Q1 of 2025, I wasn't that cautious, even though we ran up to 125. Last quarter, I was a bit more cautious, and then we kept going higher. So we're going to have to see. But yeah, like Meta, dude, Meta destroyed earnings. 26% EPS growth on a $1.7 trillion company. That stock's down 12% because of a tax charge. And Palantir is not going to have some tax issue, but you just never, whenever I think I get too excited about earnings, I remember how humbled I was Q3 2024 on Robinhood earnings, because I was like, there is no way in hell Robinhood's going to miss. Like, no freaking way in hell. They missed by 20 million. And I'm seeing the stock go down 29%. This was 2 days before Trump got elected. And then, Trump got elected and the stock went back to normal and my options were saved. But I was just like, oh shit, I guess I got the numbers wrong. And I legit I messed up on their, what do they call it, dude? This new accounting term. Does anyone remember the thing that they bring the assets over to the platform? So it was some term I'm forgetting about, but I didn't factor that in because I forgot. And neither did any of the analysts. The analysts had 650 million. It came down to 632. So all the analysts were like, what the hell? But yeah, contra revenue. There you go. Shout out to Eddie right there. Contra revenue. Now, I don't think Palantir is going to miss. Let me make that very clear. I do not think they're going to miss. I quite frankly think they're going to beat by a lot. I just don't know how the stock's going to react because the stock's already up so much. Now, if they beat by a number that not everyone is expecting, AKA they get closer to 60%, I think we're going to a place called the moon, because there's not that many software companies that are growing anywhere near 60% with the margins that Palantir has. Also, here's another thing we didn't talk about. If Palantir can raise their fiscal year 26 guidance, I think right now they have 45%. If they can get that number to 50%, we're also going to be very excited. So that's what they have to do. Top line revenue growth above 55, adjusted operating margins closer to 47. And then I think if they can get that fiscal year guide for 2025 closer to 50%, and then maybe potentially 26 closer to that same level, they're going to have a good quarter. And I think it is going to be very exciting. Now, for all the people screaming about Palantir's valuation, look, Amir made a really good point on Palantir Weekly. Palantir's valuation trades at 650 times earnings. Let's say Palantir gets cut in half and is trading at 300 times earnings. Is 300 times earnings expensive? Anyone would say, yeah, objectively, that's expensive. So is 600. So is 400. So is 500. So is 150. At this point, I think looking at the earnings multiple is just a ridiculous way of analyzing Palantir, because it is, even when Palantir was $20, bro, it was trading closer to like 70 times earnings, because Palantir has always had a wide outstanding float. And so that outstanding float has always, led to a large premium on the price to earnings. And because you have to cut the EPS, the earnings by so many shares that are outstanding. And so it always resulted in these like obscure metrics that looked weird to the average investor. But then when you look under the hood, you're like, well, wait a second, there's these other elements of the story that are very important to understand. And if we just look at price of sales and price to earnings, it's really tough. Now, granted, is Palantir trading at such an aggressive multiple that if they make any mistake, that multiple gets destroyed? Yes. There is no room for them to miss earnings at all. Having said that, let's say Palantir falls back to 150. You're going to have a lot of people buy that dip. You're going to have a lot of people that want to get exposure to Palantir and want to be able to buy that dip. So I think if we do get some nasty dip, you will have dip buyers. And I think if you don't have that nasty dip and you have the stock go higher, you're going to have a lot more people that don't care about the valuation. They just care about the story. And the story, as long as it continues to stay intact with the growth to back up the story, that is what's going to get people excited. And so that's what I got on Palantir. AMD will be on Tuesday. I mean, I'll be live with Jose and Neil for AMD. We'll do a little bit of a preview, probably Tuesday morning. I'll have Jose in the market open and we'll talk about AMD. But I mean, again, I've already said my thoughts on AMD. Lisa Su's got to up that revenue guidance, just like Larry Ellison did by using remaining performance obligations to show that OpenAI has committed to $80 billion, even if they've not given the $80 billion. And I think that's going to keep the stock elevated. If she doesn't do that and you get some crappy 13, 14% earnings growth, or not earnings growth, the data center revenue growth, I think the stock's not going to do well. So I really do think she's got to up the RPO and use OpenAI as the reason to explain it. Amit, who is that picture behind you? That is Ronaldo and Messi. The quote is, "Victory is a state of mind." Victory is a state of mind. Until the stock drops, then victory is, not a mindset. It's the stock needs to go green to be victorious. So, all right, grabby grab. We'll end off the show with grabby grab. I'm excited for grab tomorrow. I posted on my Substack the deep dive. I disclosed on that Substack I now have over 40,000 shares. So your boy's walking in with a pretty heavy bag for this earnings. Look, dude, the thing about grab, and I've been thinking about this all weekend. I don't know what's going to happen to the stock. I really don't. My gut, my gut is telling me they're going to have a great quarter. They're going to beat and raise. EBITDA guidance is going to get closer to 500 million, and the stock's going to go much higher than where it is today. I'm thinking around that 680, 690 range. Maybe it crosses 7. 7 might be psychological, but I think we get above 650. But that's what my gut tells me. What my mind tells me is that the earnings come out at 7:30. None of the brokerages care about grab. There's not a massive retail community. You have 7:30 to 8 p.m. in the overnight markets or in the after hours markets that are highly illiquid for any massive move to happen up or down. And then it's an international stock that's reporting earnings at 8 a.m. Singapore time. So there might not be enough people in the United States that even know that the earnings is happening tomorrow. And so I kind of think that the stock's going to be flat or it's going to be red because there's just not a lot of volume that's going to be coming in because you're going to have 30 minutes to make a move on the stock because the earnings come out at 7:30 and overnight markets open at 8 p.m. but after hours close at 8 p.m. and grab doesn't trade in the overnight markets. So I think the earnings would have to be so substantial to get the stock to really make the move above $7, which look, based on the numbers, if you look at that Substack, I went through even more numbers over the weekend. I really do think that move is possible. But then again, I could be wrong. And if it doesn't happen tomorrow, then it doesn't really change my thesis. It's just a question of, the public perception of what's going to happen in the context of grab. So look, ultimately on the stock, this is the third name that I associated my brand with in this content creating finance game. It's actually it's one of the coolest games ever, but it's also with its ups and its downs. The ups are you associate yourself with a name publicly, you put out a thesis out there into the world as a human being, and you say, hey, I think this stock is undervalued. I think the stock can go higher. And the magical thing about this industry is that if the stock goes higher, a lot of people get excited about the way you can analyze a company, and they start to respect your analysis and your skills on your analysis. However, you cannot be a one-hit wonder. And so I think over the past couple of years, the most important thing that has happened outside of Palantir is finding that second one, which is Hood, which really just even forget the public perception of myself, the internal perception of myself, being able to say, hey, you can do it once, you can do it twice, maybe you can do it 3 times. It's really important, but you put yourself out there on a limb, right? And when you're putting yourself out there, it's scary because it's like, what if you're wrong? And by the way, I'm likely going to be wrong many times in my life. Bill Ackman's been wrong on a lot of things. Buffett's been wrong on a lot of things. And those guys, when they're wrong, they lose tens of billions of dollars. You're not just talking about hundreds of thousands. So it's part of the game. It's part of the legacy. And we're going to see what happens. But it's also part of the excitement. Because if it works, it works. And not only do you get the financial upside of it, but you also get the upside of just mentally knowing, hey, if I did it once, twice, 3 times, maybe I can do it the 4th time. And I don't know how this is going to play out. It's also one of those things where it's like, there's a lot of names that have done very well this year. Nebius, Iran, all these names. I was not paying attention to the data center names. And actually in the Nebius deep dive, which I'll link in the chat for those that want to read, I explain that I was more focused on NVIDIA than any of the neoclouds, which I quite frankly, although I missed the neoclouds, I don't have any regrets because I needed a big tech position. I needed a cornerstone in my portfolio. And while I was focused on NVIDIA, I didn't have time to focus on a Nebius or an Iran. I was too focused on hey, am I going to be right on this? And ironically, the only reason Nebius and Iran are doing so well is because NVIDIA is succeeding. Now, NVIDIA is up 40% this year. Nebius is up 400%. So there's more alpha in some of these other names. But nonetheless, my attention was not on all these data center names that went to the moon, or quantum names that went to the moon, or nuclear names that went to the moon. My attention was on NVIDIA in that overall space. And then the other names, I just look, I'm not a quantum guy. I'm not a nuclear guy. Like, I like energy and I'm trying to get more into energy, but I was never going to find Oklo because like, it is really hard to make sense of when it was 10 billion and no revenue, 30 billion and no revenue still doesn't make sense to me. I found Grab. That's the one that I found. And and look, it's up 25% this year. So it's beating the S&P 500. The question now for this quarter is, can they really outperform the S&P? Because the S&P is at 18%. So if we end out at 6 this year, S&P ends out at like 7,000. S&P will be up 21%. Grab will be up 26%. It's a decent beat, 5%, but it's not like a substantial beat. So that's why this quarter's got to be a good one. This quarter's got to be a good one. But again, I've gone through the numbers over and over again. I believe it's undervalued. I've looked at multiple DCFs. I think fair value is closer to $9-10. I've looked at the institutional volume. This thing is owned by 84% of the institutions. It does not make sense to me for why the institutions have been buying as much and for the stock to stay depressed. It had 1 billion shares of volume in September. I mean, I can go through a million different reasons, but no one's really going to care unless the stock goes up. And so tomorrow we get to see if the earnings are good enough for the stock to go up. Which, look, here's my thing. And I'll be dead honest on Tuesday's market open on my thoughts on Grab. If the earnings suck, I will open the show by saying, look, I thought the earnings sucked and I don't think the stock deserves to get a move. If the earnings don't suck and the stock still doesn't make a move, I will flat out say, I own this stock long. I believe in it long. The earnings were good. The stock's not moving. I cannot do anything about that. There has to be a glaring red flag for me to see the disconnect between the stock price and the actual opportunity. So with PayPal, one of the reasons why, you got a lot of these PayPal bulls saying it's going to go to the moon, but then the stock doesn't do anything. And their defense isn't that compelling to me, because if you look at the margins on their transaction volumes, that's going down. Forget the growth on PayPal going down. The actual transaction margin percentage the actual margin on their transaction volumes as a percentage of the overall transactions and the average order values, those are going down. So when that shit goes down, you're like, oh, there's like a structural problem in PayPal's business. Not a structural problem to the point where PayPal is dead or anything like that, but it's definitely not going to get the stock to go to the moon. No OpenAI partnership or dividend is going to save that. They've got to do something totally different. With Grab, you have a company with $7 billion in cash, growing 23%, re-accelerating their revenues, adjusted EBITDA hitting all-time highs, free cash flow, GAAP profitable. The company's embracing media for the first time in 5 years. Like, all these things coming together, to me, if the stock doesn't move tomorrow and the earnings are just in line with expectations and probably beating and raising like they have for the past couple quarters, I'm not going to complain about it. And I'll take all the shots that people want to take about the stock not moving. That's fine. But I'm not going to sit here and question my thesis unless there is a reason to question it. And so far, Grab hasn't given me a reason. But we're going to see on the earnings and if that reason can continue. Yeah, Austin, take rate. That's the word I was looking for. Thank you, Austin. Take rate is continuing to go down. Which is an issue, right? Because it signals that maybe there's too many competitive problems. Maybe internally their margins aren't that good. I mean, look, the same thing with SoFi, right? Like, Tanner sleeps like a baby at night because Tanner knows that company did the best they could. Could they have done a little bit better on Q3? Maybe. But I mean, realistically, they had a bombastic quarter. Stock was flat. What, is Tanner supposed to feel bad about that? No. I mean, like, he knows the company's executing, and as much shit he's going to get publicly for the stock not moving, it's not, I don't think it would make him lose sleep at night. If the stock wasn't moving because the company wasn't executing, AKA there were some fundamental flaws, he would probably be, losing a little bit of sleep. But that's not happening. So it's just going to be one of those questions on, how this ends up playing out. I really do want this one to work though, because it would be very fun if we can end out the year at around that 750 range, which is where I think it should be trading. It would just be a fun end to the year because there's a lot of work and research that went into this one. So, this is the joy of the spontaneity of being an investor, especially being an investor that has a public opinion. It's like, you can be dead wrong or you can be dead right. You're going to get all the praise if you're right. You're going to get all the shit if you're wrong. But you got to put yourself out there and then ultimately see what happens. Guys, Grab earnings is tomorrow. Please stop trusting your brokerage. Go to the website. Just type in the company and then IR. It takes 2 seconds. You'll see the earnings on the website. Do not trust the brokerages. They're usually wrong for pretty much every single company. So no, it is not November 14th. Trust me. It is November 3rd. It is tomorrow. But with a lot of these names, you just have to go to their website and you'll find their earnings as well. So that's what we got. That is what we got for grab. Is ETH tanking? Are we actually tanking? Oh, yeah. She wants to go below 3,700. Dude, this freaking thing. This freaking thing. It is what it is. It's not moving. Everything looks like it's going in the right direction on the overall story. It's just the price is not moving. The price on ETH is not moving, but Bitcoin as well. You know, Bitcoin has not been moving like crazy. So there we go. That's what we got tomorrow. Palantir and grab. It's funny because Palantir is like, you know, Palantir has been the stock that's the first company I've covered publicly. That earnings is in 4 p.m. and that's going to have a whole range of emotions. And then in the afternoon, the next name that you're trying to put out there into the world, that is earning. So I think it's just going to be an emotional day across the board. It's definitely going to be an anxiety-producing day for me. But we're going to have to ultimately let the chips fall where they do and see how it plays out. My spreads are 7.5 and 10 for Jan 2027, 7.5 and 10. One thing I'm thinking of doing with my spreads, if we do get a big pop, is selling half of them, because I just don't want to be heavily leveraged into 2026, dude. I really don't. I don't want to have a ton of options. And quite frankly, the only options I have are grab options. So if we do get a pop, I'm thinking I have 2,500 of those leaps. I would be happy getting rid of 1,500 of them and keeping 1,000 and just buying the stock with the option money instead. Like, there's just something about 2026, dude. I just don't want any options. I've had options for the past 2 years and it's been a lot of just like navigating all the emotions of having that many violent swings. And I have no idea what's going to happen in 26. So I kind of don't want to have that much leverage. But even if we don't get a pop, I paid 34 cents for them. They're trading at 40 cents. So even if I get it at 35 cents, I don't really care. But I would rather just buy the stock if the options don't make that big of a move, if the company doesn't make that big of a move. I sold my copper options a while ago. I made like $2,000. I sold them at 64. COPEX, I sold those a while ago. So no COPEX. So yeah, I sold them the day gold went below 4,000. No, gold was like at 4,200. And I was like, all right, if gold's going down, silver and copper might be falling. So I got rid of my copper option. My uncle still has a lot of it, but he bought it way earlier. He's up like 200 grand on those. So, and he's like still heavily believing in the copper thesis, but I had like 10,000. So yeah, I got out of those wild. That's what we got, folks. That's what we got. It's going to be an exciting, exciting day tomorrow. And Sam says, imagine $10. Dude, if we pump to $10 by the end of the year on grab, I can't find that realistic, dude. Even if like we pump to like 750, which I think is possible, but to see that actually happen would be amazing. Anything above that to me would be like aggressive, unless the company, puts out an earnings that warrants that level of aggression. So it'll be exciting. It will be exciting. Is it worth getting into Palantir now for tomorrow or wait till earnings? Palantir is at an all-time high. If you buy it here, I do think the stock can go higher if they deliver a massive earnings. However, if they deliver a massive earnings and the stock is already priced for it, it could also just be flat and or go down. So I say this to everyone who asks, should I buy a stock going into earnings? You have to be ready to DCA. You have to. You just have to. Because if you're right, then you sound like a genius. But if you're wrong, then you're going to feel like an idiot for bag holding. But you can only blame yourself because you're buying a stock at all-time highs. It's not like Palantir is trading at a bottom. Same thing with Hood at 150 or Nebius at 132. Even Grab's already made a 30% move this year. So it's like, is it the best buy at 607? I think so. But if it falls to 550 and the stock is still up, 22% year to date, like it's one of those things that you just have to be ready to handle if it does take a dip. So that is my answer. It really depends on if you're ready to deal with the ramifications of it. HIMS and Cypher are tomorrow as well. I'm not going to be covering those two tomorrow simply because we got Palantir and Grab. I will cover them on Tuesday. So we'll talk about HIMS and Cypher. Cypher, I know, is a big data center play for a lot of people. HIMS, look, I think HIMS is cheap. It's kind of lost a lot of momentum over the past couple months. And with the lawsuits, the CEO, the way he's been acting, again, there's just a bunch of negative stuff in terms of sentiment, and the community on HIMS is kind of dead on Twitter. That I don't like. The HIMS house thing is over. The founder of it left, which I was very surprised by. I thought he built an incredible community, and building a community is not easy. Okay, like when shit goes south, like it did for Palantir for 2.5 years. If you're gonna be the guy who gets a lot of the credit when shit goes to the moon, you got to be there when shit goes south. So if you just leave in the middle of it, quite frankly, well, what's the point of even starting it? Like, what was the point of building all that if you weren't going to be there when things get rough, you know? So through thick or thin, I was very confused why the HIMS guy left. Like, I thought the whole point was to cover the company for a long time. And that also, to me, is kind of bearish, dude, because, you know, you talk about these companies that have these decade-long runways and they're trying to be the Netflix of health, and you have this, like, long-term vision. And then the content creators that hype it up, if they're leaving not even a couple months after they start the community, it's just kind of weird to me. And it's no shade against him. He probably has to do other shit in life that he's more concerned about, which is fine. But he's objectively saying he doesn't care enough about the community anymore to dedicate time to it. And so, I don't know. It is very weird to kind of see some of these communities die out. But yeah, Tuesday, we're going to see if we can get some more coverage on that as well. So there we go. That is what we got. That is what we got for this week. I didn't watch the full Sham New York Times interview. I saw parts of it. I thought it was good. But yeah, Sham did do an interview with the New York Times, and you know, he was asked some important questions about Palantir and their relationship with data and all that stuff. So for anyone who hasn't watched it, you can definitely check that out. I thought that was important. Do we have any other crazy news? We talked about all the NVIDIA stuff. No, nothing too crazy. Oh, I mean, I got this chart right here. You know, Meta is another name that I'm going to be looking at a lot more deeply this week. But look at the top tech companies in the world and their earnings multiples. Meta now trades at 22 times 2026 and 19.7 times 2027. I really do think it's becoming stupidly cheap. But dude, it fell to 645 on Friday. I mean, and you got a lot of the technical people saying, all right, 620 is next, which maybe it is. But this narrative that Meta is spending all this CapEx is stupid and their stock deserves to get hit, it's quite incredible. That's the first time this narrative has really entered since 2022 after the whole metaverse stuff. So, yeah, we'll cover it more, but I don't know, dude. I just don't think Meta keeps staying at this multiple. And if it does in 26, I think you get a full year of consolidating and being able to ready to buy up a massive Meta position, similar to Google. And Google is much more diversified than Meta, but dude, Meta is going to do $200 billion in revenue this year. Yeah, they're wasting money on a bunch of other things, whatever. But like, I know they're tapping the debt markets. I get all the bearish tones around the new bearish ideas around the company, which is creating a net bearish tone. But I don't think you bet against Zucks over the next 5 years. So we'll dive deeper into Meta and see what we got going on. And quite frankly, I'm not that excited to buy right here, because if it does give us, if the narrative is that bad, like Google fell from 170 down to 140, like that for equivalent to Meta, that would be closer to 580, 575, which I think would be a lot more attractive if we get there. I don't think I'm going to be live for Grab, guys, because Grab is happening like literally right after Palantir. So I think it's going to be hard to stream Grab's earnings in and of itself. I will see if I can try to do it, because we got Palantir, and then I think we have a little bit of a break, and then Grab, which I don't even know if I'm going to be able to navigate through that. So I might not be live for Grab. If I'm not, we'll obviously talk about it on Tuesday. I'll probably put some thoughts on Twitter. You know, the company, if you just go to their website, you'll get access to the earnings call. But I will see what I can do, and then we will talk about all the results after it comes out. All right, guys, that's what we got. Thank you, everybody, for being here. Hopefully everyone had a good Sunday. We are getting into the last 2 months of the year, which is kind of crazy. Any expectations for Tesla November 6th? I think the shareholders will vote with Elon, and I do not think Elon's going to miss out on this $1 trillion compensation package, and it's going to be very exciting to watch Elon go to work over the next 10 years and try to take Tesla literally to the moon and become one of the most valuable companies on the planet. But I think he'll get an overwhelming amount of the votes. I'm not too worried about what should be happening with Tessie. All right, guys, that's it. Thank you, everybody. I'll be back tomorrow morning. Market open. Big day tomorrow. We got Palantir. We got Grab. Got a lot of earnings this week. We're going to see how this ends up playing out. And yeah, it should be a pretty exciting week. And we got a lot of macro stuff to talk about as well. Hopefully this China deal goes in place and, we get a lot more clarity on that. Again, the 2 deep dives on Grab and Nebius are out. BM&R and Duolingo are also on the Substack if you have not read those. I'm really liking the writing. I'm really liking it. It took me a lot of time. I think the next 2 deep dives are going to be Reddit and IREN. So I'm spending the next 2 weeks on those. And hopefully those are out November 15th. But I'm enjoying the process of it. I have a lot of other Substack ideas this week that are probably going to come out. So I'm thinking of kind of not just deep dives on companies, but deep dives into broader issues like this whole bifurcated economy, the consumer, big tech earnings. Like there's a lot of stuff I want to write about. So I think we should be getting at least 1 article a week and then 2 deep dives a month. And we should keep going from there. All right. Thank you, everybody. Appreciate it. Love you all. I'll be back on the market open. And we got an exciting week. November is officially starting. We got the almond croissant. It's going to be a great month. Almond croissant. And I will see you guys tomorrow morning. Love you all. Thank you, everybody. See you guys tomorrow for the market open. Bye, everyone. Have a good one.